Everybody, welcome back to Markets and Sectors. My name is Mike Fairbourn. Plenty to look at this week. We had a lot of stocks moving in certain groups up and down. We want to take a look at markets as well, even world markets we want to take a look at. So we're going to explore that today with you folks. We'll be looking at sectors, breaking that down. You know what we did start to? We did start just getting into earnings season. I want to show you what's moving, what's not, and maybe some of the reasons behind that so we can get some ideas on what to look at into next week. So which could be interesting, and there are more earnings out there. But yeah, there's some movers with earnings up and down. We'll definitely go through that with you. Hello to each of you to here today. We've got Will, we've got Alfie, Stoic, Life in the Fast Lane. We've got Envio, Will, Ray, Rojo, and many others. Welcome all. If you were here, the very first person here, I can't see it because we got a pinned little note there, but it's very good to pin that because a good friend and colleague of mine, Mr. Brent Moores, is here to fill in on the chat. I really appreciate Brent and his knowledge base that he brings to these discussions. Folks, you can follow him. Be sure to follow him. Brent Moores, CS. You'll see that up in the pinned section up top. Mike Fairbourn, CS. And let's get rolling. What do you say? Let's hit some disclosures. Got plenty to take a look at today. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application for education purposes only as well. Now, investing does involve risk, including for some products more than your initial investment. Quick look at some of the futures disclosures there. We don't trade futures, but we definitely reference futures as well. While I'm at it, I just wanted to state too, that as we do talk about, I do want to take a look at Bitcoin today, and I didn't see that disclosure, so I just wanted to quickly note that digital currencies like Bitcoin are highly volatile and not backed by any central bank or government. Due to the high level of risk, investors should view digital currencies as purely speculative instrument, I should say. And lastly here, past performance is no guarantee of future results. So let's take a look at it right now. What do we have? We've got, let's look at our markets right now. SPX up top. There you go. Let's take a look at the lines coming in. I'm going to get my chat box set up so I can see you guys and everybody's typing. And welcome to all of you just joining us right now. Great to have you here for our final webcast of the week, where we do recap markets and sectors, as the title states, as well as stocks and world markets. We go into that and other categories too, like futures. But then we also want to give you kind of a feel of what to maybe expect to see next week, or give us some ideas that are out there at least. Okay, so with that, take a look at the S&P 500. We've done a few of these ascending triangles in the past, haven't we? Over here, over here. Here is no exception. That apex of the triangle, which you will see, I'm going to draw this out as long as it exists here, the apex where those two lines do converge. Trend line off the bottom, coming up off the bottom, trend line still rising off the top. We're getting closer and closer to it. We're still closing within this range. Now, generally it will say you'll break out before or break down. It could be either way, right? Before that range hits. But the key point that I want you guys to really recognize here and to gain from this is we might be coming up to a pretty maybe a bigger outsized move, because what we're getting here, and why triangles, what triangles are discussed as a chart pattern, is they are coiling. They're getting into a tighter and tighter range. You can see how I've drawn that in, and generally it can act as a spring one way or the other. Now, one thing that traders will look at, they'll say, well, I'll tell you what, people will ask me too, just in the charts, they'll say, well, what direction? I've seen this a number of times. Well, generally, traders will say it's in the direction of the trend, and therefore, and the trend we know is going up. Ascending triangles have been known to be bullish by traders, investors. That's what they'll see them. Groups of traders will see it that way because it's ascending. And by the way, what do we still see here? Yes, we had trend over here, big T. And I will say this, it's a smaller trend. I mean, it's still part of the bigger trend, but you can see that smaller trend developing here as well. Higher lows, higher lows, higher lows, higher lows. And to coincide with that, yes, higher highs as well. Folks, that's a trend up. We could be getting ready for a move to the upside here as we're getting closer and closer. And one key area that we could be watching is a big round number that we're right up to right here. Because the last big round number, way down there. I'm talking, we don't even see it. And this is a daily chart. I've zoomed in on it, but like 6,000, a big round number. That's 7,000. Sometimes, not every time, but sometimes those can be big resistance levels if you're below it, big support levels if you are above it, or what I just mentioned, if you are above it. So what could happen is if we do in fact break above that level, what was support, the corollary to that can become resistance in the minds of a lot of traders, investors. Now, I do want to zoom into this just because we are right here, right now. I oftentimes will show this chart later on in our discussion, but folks, a seasonality chart, I'm going to make this comparable. I want to make sure we can see this. Come on, there you go. Let's go ahead and take a look at it on a percentage basis so we can see the 5 years of data kind of in a little bit more closely. Now, right over here, you can see this is where we're at, and we are right now moving with seasonal data the last 5 years. Okay, we're going up, and it goes up to about mid-February. Now, I do have to interject in here, folks. In that last 5 years, we had some zingers. Because March, generally, if we knock out those two zingers, it goes to about mid-March, and then a pullback. And you've heard of this. Okay, well, there's a lot of different sayings. Anyways, you might not have heard of them. Anyways, over that 5-year time frame, what did we have in here? We had COVID. We had tariffs. Two really strange things that normally haven't happened over, I mean, just over years and years and years, just speaking as it is. But you take those out, we might have a year like this. We don't know what to expect. Okay, but yeah, 2020, as soon as 2020 comes out, I mean, when that goes away from our visual here, because it goes back 5 years, this may begin to lift up a little bit when we get past COVID, right? The COVID year, 2020. Now, if I do a 10-year comparison, this is a 5-year comparison, as you can see. The impacts were so big in March that it pulled it down. But I'm just letting you know, we're following in line like we normally do. This is the average movement. If you average all those years in together, and on average, it goes up. You know, these could be strong months over here. As you can see, the last 5 years, they have been. It doesn't have to follow this, but on average, it does. Now, a quick note here, if I were to go to a 10-year and provide even more data, folks, it gets it's very, very similar. Okay, you can see just a similar outline. If I go 20, if I go 50, I've seen something. But keep in mind, if you take this out, be mindful of it. Now, because I've dived into this and we've talked about it, I have to go to the end of this discussion so it makes sense to everybody. Folks, the tariffs, there's been a lot of discussion about the tariffs. The Supreme Court might rule on the validity of tariffs being able to continue or not. And a lot of market participants have been worried about that announcement coming out, the tariffs. Okay. They don't know how they're going to correct it. Exactly. There's a lot of confusion. But let me just state this. When tariffs were put on, what did we just say happened to the markets? Do you guys remember? It was just last year. We'll pull it up and take a look real quick. It went down. So the speculation is actually a lot of institutions are saying that if the tariffs go off, it might be beneficial for businesses because, again, they can acquire products cheaper without the U.S. tariffs. So there might be, what they're saying, there could be an expectation of a rally by some traders, investors, okay, if it goes off. So I just want to let you know, that's the expectation. It's not a negative expectation. It was the negative that brought it down in the first place. Now, if I go over here, I'm just going to highlight this. Let's pull it over. Oh, why is it doing that? Okay, there we go. I can back out. There we go. So here you go. What happened last year, folks? This was really tied into tariffs, okay, and how companies were going to respond. And, some companies did. In fact, international companies did as well. But that's what you saw when they put it on. So some are anticipating a rally if it comes off. That's all I want to say. So I don't want to say, rest easy, but you can see what happens when they're put on. So if they were put off, there could be, in fact, potential for a rally out there. We'll see. Now, we got to take a look at NDX as well. NDX has had so much to do with the market strength going forward, has it not? There's been so much. Let me correct the y-axis over here. Anytime you flip that, you're going to be looking at percentages until you go back over here. They flip it again, or I could just refresh my grid chart over there too. But take it off, boom, we'll get them back on. Okay, so a little bit different here. And from the last time we spoke, we were in the midst of a symmetrical triangle, which is getting tighter and tighter and tighter. You can see that we've already broken out from the apex. And where did we go? We went to the upside. But the funny thing is we came back down. I've got to do us a little favor here and zoom in. We have now come back down, and this is, I got to tell you guys, this is common enough. I've seen this for the past couple of decades plus, okay, that I've been in the markets, and that is that you break above that trend line. Sometimes on these symmetricals, you will hold it. You might come back and test it as support, but often traders still will view this, many traders, as a positive move. You did break out higher, and again, what is the underlying direction of the longer term? I mean, you guys know this, it's up. We did a pretty strong emphasis last week on sectors that were showing strength, and some of those did unfold, namely semiconductors. We talked about the semiconductor group last week that was showing us some signs, and here it is, Intel. Okay, so it did continue its rally right there. You can see us moving to the upside. There is the rally, and yeah, right around 50, kind of a big round number, but that's a pretty big move to the upside. This was actually one of the stocks we did trade in the swing trade class on Tuesdays. I'm just going to highlight what the trade was itself. Okay, so there's the initial move. All I simply did was extend this from the bottom here. That was the target. We took the trade off here. Originally, we got in right there at the hold. I'm sorry, it was the hold right there. But it was a trend. Why? Because we'd seen some strength. Then one of the real strong areas of keeping the NASDAQ up was this area. Also, we saw this. And these, by the way, who's to say? We don't know, and we don't give recommendations here, but these trends have stayed strong for a while, and they're still making higher highs, higher lows. AMD bouncing off a long-term support level right there at a big round number, 200 right there. Did a trade in Barb's class on that, and then also one in that swing trade class as well on that. But there you go. So there you go. There's a potential bounce right there. We'll see, though. Coming up, there are some earnings, and we had some earnings this week that I do want to dive on into as well. I have to state this too, because looking at the Russell, now the Russell 2000, known for small caps. Small caps are riskier, and a lot of people don't like small caps. But the one thing you have to say about small caps is it's a sentiment indicator for more risk taking in the market. There's more risk appetite. It stands to reason, right? If small caps are going higher. And what this can do is it can give us some ideas as to where might the strength be on some of these. There it is. You don't know. Okay. That's the symmetrical triangle. Hard to kind of see. The symmetrical triangle, we were looking at the S&P 500. The bottom line is this. If we're seeing risk assets coming in, which is what this can be, it's a sentiment indicator, right? Sentiment gauge for more buying, perhaps. That would benefit this, is not to mention the NDX that we just saw resting above its its upward sloping trend line right there. So some interesting positives. By the way, a big round number here as well. Well, okay, we get these a little bit more frequently, but yeah, there's another 1,000 points higher. That's 26,000. That's right, 26,000, where the prior highs were. So breakout here, you might test a little bit here, but that would be interesting if you can break up here, and then we can take a look and see how that seasonality unfolds. Who knows? Maybe there'll be a tariff surprise in the other direction, right? It could. Yeah, we'll see. All right, I've pulled this in over here too, because we have been seeing some rallies outside. Oh, before I do it, let's just do it. I did read the disclosure on Bitcoin. I wanted to highlight this for you guys and just pull this over. There is Bitcoin, the futures chart right there. There are a couple of Bitcoin ETFs that are floating around out there too. We're just looking at the futures only. And I wanted to highlight this. I did send a tweet out on this because this was really the first high. Speaking of market sentiment and more risk taking, Bitcoin Russell. Okay, these are good reference points. The RUT and the BTC. Oh, well, okay, say /BTC. Risk taking instruments that give us a sense of what could be going for the markets. But also, yeah, traders will look to potentially trade these as well. This right there, just 2 days ago, so Wednesday, when I tweeted that out, it was the first higher high that we got since the first part of October. This is a higher high, yeah. Right there, you can see it, a higher high. From that point on, lower lows, lower highs until we begin to really break a high right there. We did get a higher low in here, but that's when the trend could potentially really change. Now, will it change here? Remains to be seen, but it is looking like more risk is coming into the markets. All right. By the way, what's been performing too, this is kind of a strange symbol out there. I realize that. It's an index, and it's just the FTSE All World X US. I'm going to throw this into the chat just so you guys have it. It's interesting, and I bring it up. There are some ETFs out there. We don't go into ETFs in this class, but there are ETFs that look at outside the US markets. These are markets, exchanges, major exchanges throughout the world. One that we can look at in this class. I'll throw it out here right now, and there it is. That's the symbol. It's kind of an odd one. I don't know if you can read it, but it's everything outside the US. And by the way, how's it doing? Pretty good. It's higher highs, higher lows, and a really strong upward move. So looking at something like this, it just gives us a general sense that markets are moving. And I would actually say this is kind of a sentiment indicator for risk appetite throughout the world, but it does say right there, ex-US as well. All right, folks, I'm going to pause just a second because Brent did remind me of something I've been forgetting to say. If you do like today's presentation, I appreciate you mentioning that, Brent. If you like today's presentation, if you're getting value out of these discussions, folks, do us a favor, just smash that like button. It lets us know that these are useful, concepts and instructions that we're going through as we do this. And then also be sure to subscribe to our Trader Talks channel. Would love to have you guys on board. If you're not already, because you get great stuff. In fact, I'll just quickly highlight this. And I'm going to show you right here the channel itself. And this is it. This is it right here. You can go over here and take a look at playlists. Now, within these playlists, be sure and take a look at what Brent's got. He's got some great stuff over here that he teaches, other classes as well. But you can basically get the coaches and what we teach throughout the week right there. I'll send that through. It should say subscribe over here. I think at the bottom right-hand corner of the screen, it might say subscribe as well. Love to have you on board if you're not already. I know many of you are, and it's great to have you here, those that are here. All right, here. This goes into the chat right there. All right, and welcome to you, Riceberg. Always great to have you back. Got to see Riceberg for the first time. Hadn't seen him, but I did see an X post from one of the events, so that was great to see. All right, perfect. Well, let's do this. Let's go in now and take a look at, well, what we had this week? We had quite a bit of economic data, and I'm just going to read through some of that right now. In fact, let's do this. Here is a little, it wasn't there. It was here. Here it is. So just a quick note. I posted this. I'm just going to throw this down here for you guys. Oh, by the way, a new food pyramid came out. You're not going to be finding the sweet cereals in there like you did before, which was fascinating. Anyhow, there's the Bitcoin break and then a little grid chart action and then right here. So a quick note, I want to hit some of these because this was interesting data that we did get out this week. And let me go through that with you guys. God, can you see that? That might be a little difficult to see. Schwab sends this out each week, but I'm just going to kind of highlight a few details here. And just mention that CPI, looking at Wednesday, quick notes on this. Okay, the headline inflation was in line with expectations, but core, which is right down here, it was less than expected. Okay, it dropped, less than the expectation. All else equal, that's a positive. The PPI, wholesale prices for final demand increased, but were driven by some bump in energy costs. We had retail sales, just as a quick note, because this class, we will tap into some of this economic data. Sales rose by a solid 0.6%, beating the 0.5% forecast. So that's a positive. We're seeing some positive signs. And then initial jobless claims. This was the big one. This one came out on the 10th, and I'm not even, Yeah, the 10th. So, no, let's see, jobless claims. I thought we had one in here. Anyways, maybe I'm off, but that was a big mover as of late. I'm looking at the home sales right there. Jobless claims fell to 98,000, and that kind of helps to trigger a little bit of signal a more stable labor market conditions, which is good for everyone, right? That's trying to find jobs or working, and it's coming in below the forecast of 215,000. So all else equal, some positives there, but wanted to highlight that for you guys. Okay, very good. Now let's continue on here. We got past that, but just put that kind of in position with in context with the markets. Are we seeing a breakdown in the economy right now? No, there's some benefits coming in. Now, could that influence us over here? Yeah, it could. We could see a little bit of a bounce. So that's how we're kind of filtering in economic numbers. Is it more of a risk, upside, or downside? Well, oftentimes if you're beating expectations positively, it could also have a positive impact over here. By the way, other risk assets that are really kind of fascinating to consider. I got to take a look at these real quick. There is your gold, continues to rise, and yeah, just steady as she goes. My gosh, that was kind of an ascending triangle. Broke above that clearly. Still up in this range. I think it's one of the biggest gold runs ever, is what I was told. It might be the biggest one ever, but I'm not 100% on that. You can see up top here, there's the break above some highs, and right there as well. So there's a little bit of a consolidation. Yeah, I mean, we've been seeing prices rest and bounce. There's an example right there, even down through here. We don't know if it'll run, but it's just kind of some of the things that traders will see as a stronger type trend indication. Silver seems to be holding up pretty well as well. I mean, that's massive move on silver, of course. And by the way, gosh, the silver miners have been very, very impressive. AEM, there you go. It stopped right around 200 as well. I always wonder if they'll hold at these big round numbers or not. Doesn't have to, but it does cross my mind when they finally get there. There was some pretty good support, by the way. This is kind of one of the bigger names out there, AEM. You guys might have seen it. Oh, looky there. 100. Yeah, we'd hit 100. We just kind of paused for a while. Now, will the same thing happen over here? We don't know. But the mid-range, too. Broke above it. Bounce, bounce. Anyways, there's plenty out there, but they have been bouncing off some of these big numbers as well. Lastly, here's crude. Now, one of the reasons why I'm bringing these up is because when we look at some of the futures contracts, like I just said, gold, I just showed you guys what? A stock. So sometimes when the underlying is strong, you might see those underlying stocks that are impacted by gold prices going higher. I mean, if gold breaks up higher, well, that could also influence the gold miners, of course, right? Because when they get it out of the ground, the gold, it's worth more in the markets. They would make more revenues, etc. Same concept over here. Nothing too crazy. You guys know what I'm talking about. I'm just trying to blend this in with these are markets, and how might these commodity and these futures contracts impact the underlying as well? Well, all else equal, if you've got something over here like crude that's showing really maybe one of its first higher highs since, wow, maybe August sometime, maybe right in there. This was like about the same. We're breaking this high right here. So I don't know, could that change the dynamics of a number of oil type stocks out there? It could. So just keep an eye on these. I mean, these can help us too from a markets and sectors perspective. I know it's like something we don't look at a lot because we have a lot of other sectors to look at, but still, it's something to keep in mind. All right, let's look at the dollar. So DXY, the dollar itself, bouncing off some lows. Now, all else equal, if in fact the dollar is showing strength, it generally will put a little bit of weakness on some of these commodities, these futures contracts, right? And broad-based assets. And by the way, the S&P 500, it's a broad-based asset, right? It's a bunch of companies. You tend to get a lot of strength in the S&P 500 when the dollar is lower, all else equal, commodities as well. And you tend to get, broadly speaking, all else equal, and sort of in signs or signals of weakness. But this right here, this recovery, wow, this is weak. I mean, this is a very, very mild recovery after pulling back down right around that. There it is again. It's kind of odd too, but on this index, there's your 100. I don't know. There could be resistance right there too. So watch that. If you bounce off this, I mean, if we bounce off this, not you guys. I mean, we can't bounce off it, but hey, the dollar can. And if it does, and it starts to go back down again, what could that do to influence February, an already strong seasonal pattern? It might, so we're getting a few of these things lining up for maybe the potential continuation of the trend is where a lot of this is leading. All right, now let's go into some sectors. That's a lot on markets, but a lot going on. So let's go ahead and take a look at our sector overview right now and just see what we had moving this week. There we go. So this is by contrast, oh my gosh, they've already moved off the side. No way. No, the symbols have moved off the side here. I just set them up earlier in the week, and I've already got them off the page. Let's do this. It's okay. What we'll do is I'm going to go back into my grid chart and just select the 6-month sector grid. We're just going to have to look at it very, very closely. This just was kind of a zoom in on it. Not this one, I'm sorry. The rotation grid, that is. There it is, right there. The sector rotation. What we're doing here, again, is we're making a comparison of how well these individual sectors are doing relative to, it's all relative to the broader market. So it's a sensitivity guide. In other words, are these sectors moving up relative to the market or not? And that's what we're really looking at here. We're looking at it over the last week, and we'll see that just by, I'm going to have to move some of these labels. Sorry. I didn't know it would flip back so quick. I'm going to have to do it, honestly, and I will do it right before we get started next time. Technology, discretionary, financials. Gosh, I got plenty of those up there. I got too many of these. I have no idea how that got there. Okay, just moving some of these out of the way, though, so you guys can see them. And we'll move this guy over here, too. Activate it and move it. Okay, energy, and then I'm just going to erase this. Okay. All right, so there's energy. We just looked at energy, and you saw energy in the form of crude. Now, these are the stocks. These are all stock baskets within the S&P 500. So collectively, amongst these 11 sectors, you are getting all 500 stocks in the S&P. So they have met the requirements to meet the exchange to be on there, okay? So we've got that in place. Let's move this to staples. Gosh, I got to move a couple more real super quick, okay? Boom, there we go. Activate this guy, pull it over here. That should be good. We are good. Okay, good. So what's been moving? Materials? Yes, more recently, we really have to look at this range over here. Spike. I'm going to say energy, positive. Compared to the markets, we broke above prior highs over here. Okay, financials actually down. Now, financials are really fascinating. We got to look at this because some of them have been doing really well. We actually had a couple of earnings beats this week on financials, and we had some earnings misses. You guys know what the differences are? One of the key differences is in that group is consumer credit exposure, like credit cards. There's been some changes coming down from the administration in terms of percentage requirements on credit cards. You guys might have seen those. And it's impacting, namely credit card companies, but a lot of the banks too have pretty big exposure to credit cards. I'll highlight this here for us in just a second, but it's really kind of a tale of credit cards, really, when it comes to the banks. What's been going on with that? So negative there. Materials, okay. I mean, look at this. I mean, yeah, okay. Yeah, I guess that's an understatement. It's been going up. That's a higher high over here. Discretionaries, sideways range. Coming back down this week a little bit. Technology, still, remember, baskets of technology. These are sectors. Within the sectors, there are, in technology, I think there are 7 industries. One of them, really quite strong, semiconductors. Others, not so strong. Software, getting hit. I don't know if you guys looked at CRM. CRM, yeah, there's a software component, but collectively, they're weaker than the S&P 500. Interesting. At least at least the technology companies within the S&P 500. But yeah, this is made up again of industries, etc. There you go. Industrials, one of the highlights. Healthcare has run up a little bit and kind of consolidated. I'll show you some of those as well. Staples, actually, a really fascinating bounce. In fact, you're getting some of the value type stocks out there. There might be a growth value rotation coming up. It could be. We don't know. It's interesting. And the other one that kind of bounced off the bottom here, a little bit of real estate as well as utilities. So on a weekly basis, there you go. I hope that summarized it. I know there's 11, so there's a lot to go through here, but I'm leaving it up on the screen a little bit longer just so you guys can check it out. Quick note too, as you go into these staples in here, remember what we talked about the very, very first part of the year? It was an income strategy. Income. Is there an income strategy that we looked at earlier this year that might benefit from a lot of companies that are in staples? Do you guys remember it? It was the dogs of the Dow. Whoops, gosh, right there. This list right here. A lot of these are kind of like staples. I mean, certainly, a lot of the you'll see them in here. They're big industrial type companies. And by the way, the industrials were moving as well. The dogs. Disorderly got it, yes. And there you go. So this is we took a screenshot at the first of the year. So these are the dogs of the Dow. This is the very first session that we went through. In fact, I'll just show this to you right here. If you want to take a look at it, some will trade this. It outperformed the Dow last year. If I just go like this, I think if I just go dogs over here, it might pull it up. Where's the recent one? Right? No, that's a year ago. Anyhow, there it is. It's at the bottom of the list. So this is the dogs of the Dow. It's in there if you guys want to take a look at it. But we talked about that in general for that income strategy. That was like the first one we did this year. You have to, because it starts at the beginning of the year. By the way, quick note, this is just a sample trading method that traders will use. It's not, we're not recommending it. We don't recommend those. We just say, this is what some traders do when they're looking for income. And I just noticed that, yeah, the sectors over here are showing some strength in terms of staples. So this ties in a lot of times hand in hand with the dogs of the Dow. Did you guys notice a few industrials in there as well? Right? And it's really just all about trying to get the highest yielding Dow stocks. And a lot of times those are the dogs because the yield's gone up because the prices have gone down. You're able to get a cheaper dividend, but because they're Dow stocks, well, if you're going to make the Dow 30, you might have been around for a while. It's not a guarantee that dividends, and by the way, dividends aren't guaranteed, to always remain out there, to always be paid. Obviously, with a strategy like this, and any strategy, dividends can always be cut. But a lot of times companies that have had a long history of dividends, investors have expectations that they'll continue to pay. And long story short, basically, is that, you're getting some of these companies that have been down for a while. So they try to buy it when they get a higher yield, and then it might revaluate because income investors say, gosh, it's a higher yield. It's a dogs of the Dow stock. And so therefore they get the yield here and it goes up. I don't know. That's one of the strategies they'll look at. I just wanted to highlight it, but it is there. And you can see some follow through with it as we look at it. Okay. So that's a little bit of a glance there, but I did want to take a look, like, say, for example, as we are looking at some of the, I was going to show you the financials too, and then we'll dive into some stocks before we're done here. But back to this area here, a quick note too. Let me just share this if you guys don't have it, this grid. I built it, think scripts aren't guaranteed for timeliness or accuracy. This is not a think script, but I just say that anyways, just so nobody gets confused. But this is just simply charts, but it is a sector rotation grid. I put it into the chat. Oh, no, I didn't. Did I hit cancel again? Let me do that again. I've got it. I saved it. Sorry. You got to hit share, but you can save them in grids too. There we go. So that is I'll put it down so you guys get it. A sector grid. And it's sector rotation grid actually is what it is. And that's totally different. It's totally different from the average grid because remember, once again, it's more subtle, it's more specific, it's more sensitive, I guess is the word I'm looking for, than an actual chart itself because it's showing us the sensitivity relative to the underlying index. And there you guys go right there. Hopefully that all came in. Let me know if you can't get it. It's not working. It should work fine. Up top here under setup, if you click on setup, as you guys can see, if you want to pull this, just open shared item, paste that link in, hit preview. You'll see what it is, and then what you can do is just go back into the grid charts and pull it up. So, do you guys know how to use those grid charts? I'm sorry to keep throwing in all this stuff, but you can get to the grid charts. I just so happen, and I'm really not trying to show you all this stuff on X, but it is. I did do one this week, and I hadn't done it before. I think some people might not have seen it. It's right here. If you guys want to take a look at it, grid charts. I show you how to do it. I think it's the fastest way out there to pull up a core chart that you guys want and then pull up another chart that's totally different. There's a way to do it, okay? It's just Mike Fairbourn CS. Be sure to check out Brent Moore CS as well. I put it into the chat. Brent, definitely put yours in there as well. But if you guys could take a look at that, I mean, if you want to use it, I mean, it's only 2 minutes long. Anyways, if you want, I know many of you already know, so don't even worry about it. You guys know how to do grid charts. Okay. Now, where were we going here? Oh, yeah. We're going to look over here at, we got to this point over here where we're going to look at specifically, there's my DWM, daily, weekly, monthly chart. I want to show you guys this. This is fascinating. Look at Goldman. Huge breakout. Now, do you know Goldman? Is Goldman big on credit cards? I don't know. I don't think so. But they had a big run. They had some big moves. This was an earnings announcement this week. You can see it jump up pretty well. You had others I don't think they're huge on credit card. I don't think so. They actually moved up. They're kind of in a sideways channel. Financial institutions, banks. But then we go ahead and take a look at like Bank of America. See it? See the comparison? Look at the gap down. Now, I don't know how they did over here on earnings, and it looks like they still beat expectations, but oh, that's a big move. If you take a look at the financials, which we were just looking at, they went down, some went up, some went down. Even a better way to see this is right here. Visa. Let's just go straight into the credit cards. Look at that. There's Visa. Boom. Ooh. MasterCard to be another big one. Again, Capital One Financial. I was just going to impact their rates and what they're doing. That's a fairly big gap. Could this be the start of a downward trend? I don't know, but I wanted to tell you guys so you're aware of it. All right. Oh, how do I use the DWM? All this stands for? Yeah, good question. Good question. And you wouldn't know it if you hadn't seen it before. It just stands for daily, weekly, monthly. And I just use it very simply. I just go use these little arrows, click, click. And I've just created this. If you guys watch that grid charts thing, you'll actually see that show up there as well, as you go through it. So another thing too, I was just going to highlight, if you guys want, there's I'll show you this here too. This can be helpful. I looked at it a different way. It came through, actually, it was funny. It was a request that came in. If you guys want to see charts like these longer term trends, a certain way to look at them, I've got this, it's just called a simple price change, just a think script that I pieced together. Watch this. I'm just going to show this study. You can change the moving averages here. It's a different way to look at things. It'll just color the chart differently based upon the moving average. And you kind of get to see, it's really helpful if you look back longer term. I don't think you guys might not have seen it, but it's kind of cool to see. If prices are below the 50 period, it's in red, but it's a cool way to identify what moving averages might be working in terms of some of these trends because they all have kind of different characteristics associated with them. Watch this. If I go over here, I'm just going to show you this real quick because some of you might have already seen this, but if I go to a 20 is common for a lot of these growth type stocks. Look over here, click on OK. And what it will do is it now highlights these areas where you were below the 20 period moving average and a bounce. It can be an effective way for kind of looking at things long term. like a long-term, even a weekly chart could be helpful to look at, right? And just saying, what would a weekly moving average do? Because they are interesting too on some of these longer term moves. And does it flip above a weekly 20 moving average? That could be interesting. I think scripts aren't guaranteed for timely strategy, but if you guys want something like really simple like this, let me just show you. It's under the playlists. It's a really simple code, but I'd like you to have it if you thought it might be useful. I'm just going to go right under here under ThinkScript Studies. I'm going to pull this guy up right here and just hang on a second. Copy link address. This might work. I provide it there. It's also at the bottom of the description if you guys in fact want it. But here is it's just called a simple price change. So it's a different way that I've never looked at before to see longer term trends. And we could use this on a daily, weekly, monthly, whatever, to see it instead of watching a chart filled with lines. Anyhow, thought I'd throw that out to you guys, and there it is. Okay, man, time's going by so fast. Now, what else happened this week? I'm going to keep this on here and just see what's on our 20. Yeah, real quick. Here is we're going to keep this on. It's got a 20-day moving average on here. So everything above it was in that color and everything below it was below that moving average. And what did we see this week? Well, we had some earnings coming out. It's going to get more and more in depth as the days go on. But there's a good look at Goldman right there. There's Goldman. You can see we saw that already. That beat expectations by 19%. Constellation Brands, STZ, folks, think about staples, think about the higher dividend yields, etc. It's all right there. What about MS, Morgan Stanley? Yeah, maybe not a ton of credit situations. You got BlackRock in there. Okay, these guys beat Morgan Stanley 11%. They beat expectations. BlackRock beat by 6.12. So when I show you these things, you guys, I'm just wanting to park in your minds. Could this be the start of could the trend continue? They beat expectations. And a lot of times if they beat, and you're also seeing prices go higher, which you are seeing right over there, right? You guys are seeing it? If you're seeing the prices go higher with a gap up right there, could it start a new trend? Or could the existing trend that you saw over here begin to resume to the upside? Could you start watching it for some of the price patterns, some of the flag patterns, whatever you guys look at? There's another bank, okay? It's up. This one beat expectations by just about 5%. And let's see, Delta beat as well. Now, the losers, because where there's good, there's also bad. And guess what? Guess what these banks are? They're banks that hold some credit card debt, and they just didn't guide. Look at this, down. And by the way, interest rates might be getting cut too. Down, down, and down. Citibank was down 20. They missed expectations by almost 28%. JP Morgan, 7.5%. They've missed expectations. And by the way, they might have guided lower too. And finally, Wells missed by 2.29%. They missed their expectations there. Okay, a final wrap, you guys, and we're done. There's just so much this week that we had to hit, so I tried to stuff it in. You guys have been really great to go through here. Do we see market breadth? There is advanced decline line of the NYSE 2700 stocks, bigger basket. Breadth is looking strong. We broke up. Is that conducive to upside moves? Folks, to get trends to continue higher, a lot of times you have to have participation across the board. Some of these companies that hadn't been moving, what do we talk about? Possible rotation of some of the income, industrial, some of the growth stocks. It could be there. We're seeing indications of that in terms of the sector. Real sensitivity. I mean, it was really tight, but we're starting to see that move. This could be conducive to higher moves going on forward. Quick note, gosh, a big reveal in my mind, SPXEW. Folks, the equal weights, we don't have an ascending triangle here. We just broke above highs. That's all we've been doing already. Equal weighting everything, like JB likes to call it, the socialist index, right? Everything's equal here. And it's moving. So a lot of those that haven't been participating, folks, they're moving forward. Will be interesting to see, because a lot of times that's what we're looking for. Broad-based market breadth, and that's this, across the board, like this here. Visualizing the S&P 500, all these little players out here. Now just imagine it on the NYSE 2,700 plus stocks. All of these starting to make moves to the upside. So that's a positive. Folks, I hope you had got some good insights here. It's been interesting. It'll be interesting to see how this month and next month shapes. But I hope I gave you some ideas on what to look at, looking into next week as well. Maybe potential performers. Keep an eye on those earnings. We're in the midst of earnings season and potential market rotation. On that note, folks, be sure to smash that like button and follow us on X, as well as subscribe to our channel. Take care, everybody. Have a fantastic extended weekend, and we'll catch you all next time. Take care.